Hi, my name is Greg Crawford. I'm the editor of TABB Forum, joined today by Al Berkeley, chairman of Pipeline Trading Systems. Al, good to see you.
Glad to be here, Greg. Thank you.
You're welcome. So we're going to spend a few minutes talking about the exchange landscape, and certainly some big news in the last week or so with the TMX and London Stock Exchange announcing some plans, and obviously the NYSE Euronext Group and Deutsche Börse. And you've obviously long history in the exchange world, and wondered your first thoughts, your quick sort of reaction to what we're seeing take place in that business right now, Al.
Well, I think you're looking at an ongoing part of the natural consolidation that occurs, particularly when exchanges are public. You'll remember they were non-profits until about a decade ago.
Right.
And this idea of being a public company brings with it the baggage of a growth imperative. If you're public, you're expected to grow or throw off a very predictable dividend. And we serve a mature cyclical market that has periodic punctuation points called financial crises, and that does not put you in the growth stock category.
Right, right.
So how do you develop predictable cash flows? There are very few opportunities for you to grow at the exchange level without geographic expansion. Now, the specifics of America versus European exchanges, I think, comes down to the fact that we have been public a little longer, typically, and that we've underinvested in an effort to keep short-term revenues and profits up.
Right, right.
And I would tell you that I think the current management at the New York Stock Exchange has done a terrific job in investing and modernizing their base. But I also would tell you that the New York Stock Exchange, in my opinion, missed a decade of investment between about 1995 and 2005.
Okay.
And so by underinvesting and losing share, it became a much weaker animal than it might have been.
So they're playing catch up.
Playing catch up in a sense, and these are smart moves in the chess games of consolidation, the chess game of market share.
Right.
And I think that the jingoistic hue and cry of "Oh, America this and America that" is not the point. The point is we need strong global institutions to have strong global capital markets.
Right, right. So, are there? That said, I mean, are there, national security issues that we need to think about? Or, I mean, are there any sort of, national questions that we need to have answers to, or do we really need to take the broader look?
Well, let's look at the basic businesses that the exchange engages in. Exchanges have a license to list companies,
right.
So they have a listing stream of revenues. They have a license to trade the orders from broker-dealers. Their customers are broker-dealers. And they have a license to sell market data. And in Europe, Deutsche Börse particularly has a license to clear trades.
Right.
In the United States, we don't have that same business model. We have a mutually owned nonprofit called Depository Trust that clears and settles. So those three, now four streams of revenue are different in their protectability and their defensiveness, in their growth potential. The mandate to trade among the license to be able to trade broker shares has essentially eroded as brokers took a look at the fact that exchanges went public and said, well, you're going to raise your prices, and we want to be sure that we've got relative purchasing power versus that, and we will spread our trading around among other venues, some of which are not licensed as exchanges, some of which are ECNs or electronic communications networks or alternative trading systems, ATSs.
Right, right. As we look at, we had again this couple of deals announced last week, or near deals, and a few years ago we saw it happening in Chicago with the derivatives exchanges, CME, of course, and the things that they've done. You've got the CBOE out there now, having become a public exchange. They seem to come in chunks. As you kind of look ahead, Al, do you see a flurry of, obviously the number of listed exchanges are getting smaller as we see this consolidation, but there are still a number of smaller players out there. You've got the Chi-X Europe BATS potential get together there, and there are again some smaller players. Do you think we're going to see, some more of these types of consolidative moves happening?
I think absolutely, but I think you need to be very careful to recognize that you get new exchanges as well.
Right.
And so I tend to view it as a river flowing by you.
Okay.
There's some, there's some big logs that go by where everybody knows their brand name, and there's smaller ones who are beginning to grow. And the magic of information technology is that for very little money you can have almost infinite capacity. So a lot of the things that change market share have been related to brand stickiness, and people want a good brand for a listed company. But in our country we have this thing called unlisted trading privileges, which lets any licensed trading venue trade that stock, regardless of who's doing the regulatory piece of enforcing the listing standards and getting the regulatory fees that come with being listed. So that's one piece. The other piece is the sale of market data, and that monopoly or oligopoly has been broken by the allocation of tape fees to people on the basis of their percentage of the shares done.
Right. Okay. Well, I think we'll leave it there. Certainly, it's something that's going to continue to unfold as the days and weeks, months go by. So we'll have to touch base again and get your thoughts as the landscape continues to shift. So I appreciate your spending some time with us.
Well, thank you very much.
Again, my name is Greg Crawford. I'm the editor of TABB Forum, joined by Al Berkeley, chairman of Pipeline Trading Systems. Thanks.